Imagine a future where refueling your Tesla is absolutely free. Financial wizard Gary Black forecasts a reality where Tesla's battery costs plummet to zero. The electric dream is closer than you'd think.
We don't, this tends to happen a lot. And I think, all I want to say this, I think the FSD will happen. I think robotaxi will happen. And Herbert, you're right to point out when it happens. I'm not nearly as bullish in the near term. I do think that the best way for them to monetize it, I personally believe we're going to see about $100 billion deal with the DoD to license the technology in Dojo for use. I think that's the least liability with the most upside and validation of the technology. The object recognition alone, everything you said, Herbert, that's what makes it worth it to be used. They can even pair it with the satellite Starshield deal. Like, they're already having those conversations. The procurement teams already know each other. Like, I think that's the least path of resistance for monetization near term. Now, bring it back to what's tangible today for an auto company and an energy company. Gary, I'm going to bring this up with Rivian as a base case. Rivian beat in their revenue expectations last quarter because of the switch to LFP batteries. They got rid of the expensive nickel batteries.
Then we could all kind of keep track of it, and then, once a year at least true it up in our models. But since they don't give it out, they just give you revenue and they give you profit, and then everything else is in the middle. It's in cost.
Gary Black has made a mind-boggling forecast, predicting that Tesla's battery could actually plummet to zero in just 5 years. This is an electrifying era for electric vehicles, and Tesla's journey continues to be an epic tale of innovation, self-sufficiency, and grand ambition. And its ability to maintain these traits determines how long it's going to stay at the top of the industry. Today, a big-time Tesla fan and investor reveals how Tesla can completely take over the entire EV industry simply by reducing the cost of its batteries. But you might wonder, why is Tesla venturing into the world of battery factories? Well, it's all about making EVs more accessible to the masses, and Tesla's grand plan revolves around crafting affordable EVs that can fend off competitors and win over new customers. And to do this, battery costs have got to come down. But how will this happen? That's the secret Gary Black reveals to us.
Elon Musk has been very transparent. He is so focused on volume over margin growth this year, Alex. So, interesting figures. We're seeing it more affordable for the consumer. We're definitely winners in that aspect, but not necessarily seen as a winning sign for Tesla, perhaps signaling that they have some demand issues. They have to keep lowering their prices.
It's hard to say with a company like Tesla. This has largely been a part of the plan, it seems like, since the inception and Elon Musk's involvement. This idea of start with the expensive car, make a slightly less expensive car, to make a more affordable car, to make a very affordable car. It seems like they're truly trying to implement that. But I also saw another explanation that I think provides an interesting thought, and also maybe deserves some merit, which is, are they attempting to sort of apply this sort of razor and blade type of a process, where the car itself isn't necessarily the bread and butter, but it's the updates to the software, the full service driving, potentially the battery and its applications elsewhere. This idea that the Tesla car gets you in the door, but you're monetized after. Very similar to sort of how the iPhone seems to work now. Yeah, the iPhone's still making a ton of money for Apple, but they're increasingly reliant on you accessing that app store and the services after the fact as much as they are about the device itself.
If Tesla wants to create EVs that everyone can afford, the focus has got to shift over to battery cost. Industry experts have emphasized the significance of implementing cost controls throughout the supply chain, especially when it comes to batteries. But the question remains, how will Tesla achieve this, and can the automaker really cut down its battery cost to zero? Keep watching as we find out the answer to these critical questions. Hey guys, welcome back to Tesla Tomorrow. Gary Black once predicted that by 2030, Tesla will earn $30 per share at a growth rate of about 15%, with a PE ratio of 30, putting Tesla stock at a price of $900. His idea is that Tesla can record a growth rate of 30% per year, as opposed to 50%, which is anticipated. Gary Black is also expecting EV adoption in the US to raise to 60% by 2030, from 6% as car prices come down, with Tesla producing up to 10 million of these vehicles. However, to do this, Tesla needs to lower the cost of its batteries. In 2022, Musk told investors that the 4680 batteries are going to play a crucial role in Tesla's plan for 2023. He also added that this new design can reduce its cost by more than 50%. According to Musk, these 4680 batteries are ideal for long-range vehicles, making them suitable for vehicles like the Cybertruck. So why should Tesla lower the cost of its batteries, and how is the automaker going to pull it off? Let's find out, but before we do, if you like this type of content, hit that like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. In 2020, Elon Musk disclosed a strategy for Tesla to reduce battery costs significantly. According to him, Tesla planned to recycle cells at its Nevada Gigafactory, while reducing cobalt, one of the most expensive battery materials, to virtually zero. He also disclosed that Tesla plans to manufacture its own battery cells at several highly automated factories around the world. While the automaker is showing significant progress in the latter, it is yet to actively recycle batteries on a large scale. However, there are a few more steps that Gary Black recommends which could drop Tesla's price on its batteries to zero. First up, Tesla can vertically integrate its battery supply chain by producing key components in-house. This includes producing cathodes, anodes, and other critical battery components, enabling better control over costs and quality. To do this, Tesla will need to control its raw material supplies, since optimizing the supply chain for raw materials and components can often lead to cost reductions. The sudden rush of automakers transitioning to EVs has created some sort of hardships in raw material supply, causing prices of materials like lithium, nickel, and cobalt to skyrocket, and the pandemic further exacerbated this, with raw materials costing EVs more than ever before, doubling the prices even, leading to automakers like GM, Lucid, Rivian, and even Tesla to hike up prices to their electric vehicles. Luckily, in 2020, Tesla inked a multi-year deal with an Australian mining company and also revealed plans to begin lithium production at its Texas Gigafactory, demonstrating its commitment to self-reliance. This DIY approach sets Tesla apart from most other traditional car manufacturers, which rely heavily on suppliers for their components, often facing supply chain disruptions in the process. Another way to lower costs is for Tesla to take advantage of collaborations and partnerships with other companies, research institutions, or governments on battery technology. This move can provide access to shared resources, expertise, and funding, and accelerate advancements and cost reductions. And interestingly, Tesla has taken a step in this direction. The automaker is poised to stir up some controversy in collaboration with China's dominant EV battery powerhouse, CATL. This intriguing plot unfolds with Tesla holding discussions with the White House about the prospect of establishing this battery plant right in the heart of Texas. Now, what makes this narrative even more exciting is that Tesla seems to be taking a page from Ford's playbook. Recently, Ford made headlines by announcing a deal with CATL to construct a battery plant entirely owned by the American automaker. This move by Tesla will help the automaker produce more batteries, and as Tesla continues to expand its production capabilities, it can thus benefit from economies of scale. Larger scale production often results in reduced cost per unit, and this includes those costs associated with battery manufacturing. Tesla can also invest in research and development to enhance battery tech, optimize materials, and improve manufacturing processes. Already, the automaker is making significant progress with the 4680 cell, and has recently confirmed a production milestone after building its 20 millionth cell at its Texas Gigafactory. In June, Tesla announced the production of 10 million 4680 battery cells at the factory, which means that in just 16 weeks, the automaker doubled its production, bringing the total average production to 625,000 cells per week. Back in 2020, at its Battery Day event, Tesla revealed the 4680 battery cell, the car company's solution to extend vehicles' power, range, and life. A few 4680 battery cells have been integrated into the Model Y, and it is believed that these battery cells are going to be critical for Tesla's new vehicle program like Cybertruck, expected to enter production and delivery stages by the end of the year. When it comes to Tesla, the focus isn't necessarily on soaring valuations, but it's on ensuring that the company's sustainability is there. And one way to do this is by taking control of battery costs. But do you think Tesla can bring those costs to zero? Let us know, and let us know your valuation of Tesla. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.